plays a very important role in Indian capital market. So let's see how this capital market in India is being structured, and who are the different players, who are the different institutions who runs this capital market. So the structure of capital market is important to understand before starting investing. So you should know who are the players, who are the institutions who are running this particular capital market, and what are the different types of markets that are available in Indian structure. Okay, so the next slide that we are talking about, Indian capital market structure. Okay, so generally in India we have two different capital markets. One we call it as a primary market, and the second we call it as a secondary market. Okay, now what is primary market and secondary market? We will have a different next slide on it in detail. What does it mean? But in general, when we say primary market, is a market where in start the corporate comes to exchange. So it is available in the securities market like NSE or BSE. So when we talk about NSE and BSE on the exchange, if a particular corporate wants to get listed into a market on NSE or BSE, when you can hear a lot of news that this securities is now listing on the exchanges. Okay, now you are hearing about LIC is getting listed on the exchanges. So what does it mean? They are listed on primary market, where you have to take a shares through a bidding way. You cannot buy and sell unless and until they get listed. After listed, you can start buy and sell those markets. But before that, you have to bid a particular stock for buying. So that bidding process is called to be a primary market. That IPO is called to be the process of IPO is called to be a primary market. Whereas secondary market is nothing but a market where you can buy and sell a transaction very easily into the market. So there we call it as a buyers and sellers comes together and buy and sell a particular security at a particular price which is determined. So we have talked about investing in equities is an important instrument, right? Earlier we have talked about to beat the inflation. But where we should go and invest, it will be invested on the primary market or either to a secondary market. Same way when you go to a kirana store, right? Or a supermarket, what you will do, you will shop for your daily needs, right? Similarly, when you go to a stock market, you have to do a shopping of what? Of an equity investments. So for shopping of an equity investments, you have to come to a stock market. Okay, therefore the stock market is where everyone who wants to transact in shares, right? Who goes to transact. In simple terms, it means nothing but buying and selling. You have to come for buy and sell. So what you can do, if you want to buy a share of Infosys, let's say, can you buy it without a stock market? You can't. So for buying or selling a shares of an Infosys, it can only happen through a stock market. And therefore the main purpose of a stock market is nothing but to facilitate that particular transactions for you. So if you want to if you want to invest into an equity market, okay, you have to come to a stock market. So if you buy a share, the stock market would help you to meet the seller and vice versa. It is not easily available in private equities or into a real estate investments, where you cannot easily get the seller or a buyer. You have to go and call the brokers for that, right? The broker will come, they will give you that this is the property, this is the rate, this is what facilities are. So it's very much not very easy to get, right? Here you can easily buy and sell a particular share, and that facility is being provided by whom? By the stock market.